90% of trading success is psychological, 10% is technical. It is not the chart that make you lose money. It is you. Your fear, your greed, your impatience, your doubt, and your ego. However, this trading psychology bootcamp video will change the whole game for you if only you pay close attention, grab a book and a pen, and watch this video to the end, because at the end of this video, you, yes, I said you, your dopamine will be rewired to a psychological trader and be able to beat the market and trade with high psychology. So guys, it's day 12 of BJW Bootcamp, and I will be discussing and explaining the trading psychology you need to overcome fear, greed, impatience, doubt, and ego, and how your emotions and mindset is affecting your trading decision, because it is not the charts that makes you lose money in the market. It is you. The fear, the greed, the impatience, the doubt, and the ego, which is the 5 core parts of trading psychology you need to master to be able to beat the market right there. However, let's start with the first one, which is fear. Now, the fear of losing, the fear of missing out, which is FOMO, the fear of pulling the trigger. So you want to know that fear is one of the core reasons traders win or lose. I hope you guys as well with your pen, your book, and jotting down the whole things, because this is going to be an explanation class whereby I'm going to teach everything you need to do, everything you're doing wrong that is affecting your trading, because your strategy, your technical analysis is just few percent. So with this is an important piece of this particular bootcamp, because with it you'll be able to pave your way off the trading market and be successful. Because fear can make you enter a trade late, exit early, and even avoid you entering good setup. So it is the emotion that keeps you from pulling that trigger when your strategy is right. So you just want to understand it. So the second one is greed. So you want to know that greed make a lot of traders to blow their account, because greed, that's act of you saying, let me hold small, a little more. I want to catch the whole trade. I want to over leverage. I want to over trade a lot of pairs and catch the whole setup on every pair. Is greed, because all these are real reasons you are not winning. You are very greedy. You watching this video, you are very greedy. You're very greedy. That is why you want to hold a trade for a little more. That is why you want to hold a trade longer than enough. That is why you want to overtrade. You want to use 10 lot size. You want to use 100 lot size when you know you are as well using a very little amount of capital, and you're also not following your strategy. You are very greedy, because why will you want to overtrade? Why will you want to hold more down or longer than enough? Is because of greed, and only greed decision can wipe your account before the week gone out. So you have to make sure you avoid greed, and don't worry, at the end of this video you'll be able to rewire and trade as a psychologist. Just keep watching. So with that said, the third one right here is impatience. All right, impatience kills consistent results. Impatience make you jump into random trade because you're bored and you want to trade. It destroys discipline and leads to emotional trading. Now, impatience will make you trade too fast, remove stop loss, jumping from strategy to strategy without sticking to one particular strategy. If you're doing this thing, you are impatient and your psychology is weak. And the fourth one right here is ego. Now, when I talk about ego, is you fighting the market, you trying to frustrate, trying to do things based on you trading with overconfidence. So all these are ego, and if you try to fight the market is always right, and the market will always win you. And you also thinking you're always right when you have a trade or when you have a setup is also ego. And however, ego makes you believe that the market must listen to you. It's the mindset that keep you from losing trade. It leads to what? To revenge revenge trade and also over trading, and all you doing this is because okay, you believe your setup is cool. All you want to do is to just trade. All you only need to be that psychology trader is one clear setup and one particular trade. And that way, if you can beat all these three, all these four I just mentioned, ranging from fear, greed, impatience, and ego, trust me, your psychology will be in 100% for you to beat the market. However, the fifth one I'm going to talk about right here is also discipline. All right, so discipline. Now let's talk about discipline. Let's see discipline this way. So it's actually the ability to follow your rules even when your emotions are screaming. Ikenna, put lot size. Ikenna, trade more pairs. Ikenna, do this. Ikenna, when you're feeling that anxiety, that is where discipline comes in, right? So it helps you to follow your rules, be it risk rules, be it your strategy, and many more. That is what discipline does. However, discipline is what separates traders who survive and traders who blow up, right? So, and in day 6, I've made a detailed video and explanation on how to trade with discipline and become a disciplined trader. So you can go learn, watch the day 6 video. If you've not watching or you've not been following the bootcamp from day 1 with us, you can go to day 6 and watch discipline to understand all I dish out on that particular video. It will really help you a lot on how to stay disciplined while trading. However, now you've known about these 5 core parts in that is killing your trading psychology. Now let me talk about why trading psychology is more important than strategy, and also signs your trading psychology is very weak. So I'm going to go ahead and write it right now. Why trading psychology is more. Now let's start with the first one, why trading psychology is more important than strategy. Now in the beginning of this video, I told you guys that 90% of trading success is psychological, while 10% is technical. Yes, it is true. 90% of your trading, 90% of everything you know is psychological. Now for you to be profitable in this market, for you to beat the market, for you to be that profitable trader that you want to be, you have to be psychological. You don't have to depend on just your strategy. You don't have to depend on just the technical aspect. You have to also see the chart or see trading in a psychological way, which is incorporating that of fear, greed, impatience, ego, and discipline together, getting your dopamine to also synchronize this 5 core parts of trading psychology that is eating you up. And once you get them right, once you can as well manage this fear, manage your greed, your impatience, your ego, and discipline, trust me, even with just little understanding of technical analysis, you should be up your game in trading, right? And your strategy is not the problem, is your mindset. You can have the best setup in the world, the best indicator, even the best signals, but if fear controls you, you will exit early in that market. If greed controls you, you will over leverage to as well make a lot of money. And if impatience controls you, you will force yourself to trade, to force the market to keep trading, to keep looking for unvalid setup in the market. And if also ego controls you, you will refuse to cut losses. Right now, so trading is not a chat game, it is a mind game. So if you can able to master the psychology of trading, the strategy will follow sequentially, guys. So you just need to know these things. I hope you guys are really paying close attention to all I'm saying, because this is something that has been dealing with me, and I believe 70% to 80% I'm overcoming it. I'm overcoming the psychology of the market. I'm overcoming the psychology of the chart. That is why I'm able to tell you these things, because these are the things I know you watching me, watching this video, watching this chart right now is going through. And at the end of this video, I will be giving you an assignment, and I will be giving you a task that you go ahead and do, that you unlock that psychological dopamine in you and become that successful and profitable trader you want to be. So that being said, now you understand why trading psychology is more important than your strategy. Now let's talk about the signs that you're noticing, or the signs you're doing that shows that your trading psychology is weak. So I'm going to come right here and write signs. So the first sign that your trading psychology is weak is, one, you increase lot size after one win. If you ever done this or you're doing this, comment down below, Bernard, you're getting me. Now, if you're someone that, let's say I'm talking to the newbie traders. Now you have it set up, and peradventure, God helping, your trade plays out. And let's say you're using 0.005 or you're using 0.5. Now that trade goes well and hits your TP. Now, because it has hit your TP, what happened? Your asset has has increased. Now, what will you do? You increase your lot size to do what? To aim more. Now, if you're doing this particular act, your trading psychology is weak. And how you're going to fix it is what I'm going to be showing you as we keep on proceeding. So the second sign that your trading psychology is weak is if you remove your stop loss when price moves against you. So now price is going against you, and then you don't want to check out on the trade. Now, best thing you want to do is you must make sure you have a stop loss in your trade. And if price is now going against your trade, and let's say you're seeing that price is coming to your stop loss, now instead of you removing your stop loss, or if you have ever removed your stop loss when price is coming to your stop loss, then your trading psychology is weak. Your trading psychology is weak. Leave the stop loss the way it is. Let it hit the stop loss, because losses are also part of the game. So the third sign that your trading psychology is weak is you chased pumps you should have ignored. Now, let's say you're seeing a parabolic move, or you're seeing a bullish move, maybe on XAUSD or BTC or whatnot, whatever pair, and now your body will be doing you, look for a buy, Ikenna, look for a buy, Prince, look for a buy. Now, once you get the buy, you will see yourself hitting stop loss of something you should have wait and look for a clear setup, and it's doing you to buy. And once you just enter the buy, you see yourself losing the money, and that is when the market will now start selling drastically. I'm actually should I say, an example of this. It has happened to me a couple of times back before, not now again. But trust me, whenever you see pumps, either sell, either buy, just wait and then look for a clear setup, and then before entering a trade. And if you're doing this, your psychology is weak. So number 4 is you hold losing trade hoping they will come back. 4, no losing trade comes back, not even when it has gone to, let's say, to the point of, there's difference between I'm in a drawdown and it's a losing trade. Fine, everybody can go on a drawdown. No, there's no trader that will not say he doesn't have drawdown. But this is a losing trade, you're counter trading and you're going otherwise, and you went on holding the trade, right? So you doing that thing, your psychology is weak. You don't hold losing trade. Before you enter a trade, be sure that you're not counter trading. Be sure it's a high probability trade, not just a shitty sort of trade, and you're entering the trade and you're expecting a 1:2, 1:3. And trust me, you will liquidate. And you doing this thing now based off emotion, based off you want to trade, you're bored, you want to trade. You want to trade. You don't just want to trade. You want to wait for a clear setup. You want to wait for that particular trade that will give you that 1:2, that 1:3. So you hold losing trade, hoping they will come back. And if you're doing this, your trading psychology is weak. And number 5, you panic when the markets pull back. I know most of you must have been in a trade, and then fine, the trade is going well, you're enjoying the ride, you're enjoying the movement, you're seeing that it has tapped into your zone, and now it's now giving you that stuff. And this is, maybe let's say you're trading gold, because gold does this all the time now, and then all of a sudden you saw a drastic full force sell coming down to your entering back, and something that's already been giving you 1:3 or 1:4, and you're seeing that sell coming so drastically. I know a lot of you will be panicking. You will be like, oh my god, I don't want to lose this trade. Oh my god, don't come to my stop loss. Oh my god, help me Jesus, help me Jesus. You don't panic. If you panic when the market is giving a pullback, then your trading psychology is weak. You're trading off emotion. You don't panic when the market is giving a pullback, guys. So if you do it, your psychology is weak. So the sixth one is you check you check your trade, or you check your chart every 1 to 2 minutes. If you do this, you're a trader, you're watching this video, and you do this, comment down below, Bernard or BJW. I do this often, all the time. I do it too, right? I won't lie. This part of psychology still affects me, right? Because I'm always stuck on my phone. I'm always looking at my chart. But trust me, if you do it, your psychology is weak, because you can't be sleeping on your MT5. You can't be sleeping on your trading view. Once you have that high probability trade, all you ought to do, place the trade and then get to do something else. Not by refreshing, looking at the chart. This is going to come to my stop loss. You're just panicking. You're just scared. You're just on the charts all the time. You ought not to do that, guys. You ought to be off the chart. You've placed the trade, then let it play out. If it hits the stop loss, fine, it's good. It hits your TP, fine. You don't even panic even if you're making profit. Just be in a serene, equilibrium. Not you're happy because you're pumping, and then when it's going the other side, you're being sad, you're crying. So you ought not to look the chart every 1 to 2 minutes. And guys, if you do this, your psychology is weak. This one, IBJW, I do it. So I won't lie on this, guys. I'm telling you reality things that are affecting you, which also affecting me, that I'm telling you guys right now in this particular bootcamp, guys. And trust me, at the end of this video, I'm going to be giving you guys what you need to do to build your psychology, to get your psychology to that peak, so you're going to be successful and be profitable in this trading journey. All right, and that's going to be it right now on the signs that your trading psychology is weak. However, if you do these 6 signs, your trading psychology is weak, because it is not your strategy that needs fixing, it is your mindset. You can write it down, guys. It is not your strategy that needs fixing, it is your mindset. The mindset of you increasing lot size after every win, the mindset of you not putting or removing stop loss, the mindset of you chasing pump, you're just being emotional, you hold losing trade hoping they will come back, you panic when the market pull back, you check your chart, you're always on your trading view on your MT5 all the time. It's actually good, but trust me, your trading psychology is weak if you do this thing. Now you've known this, now let's talk about how to build strong trading psychology, and then I'm going to give you guys the 11 daily trading code of earnings that will strengthen your trading psychology. Guys, if you're still watching this video, I believe by now you must be rewired. Your dopamine must have been shaken. So I want you guys to like this video, because that's all I want you guys to do. You're not going to be paying any dime. Just like this video, subscribe to the channel, and comment down below, I am learning, I am rewired, BJW. And also, guys, you want to know that this bootcamp is sponsored by an exchange called Bluefin, which is a centralized exchange where you can trade crypto, whatnot, whereby they have the high security. And if you've not started using Bluefin exchange, I believe as anyone watching this bootcamp must have a Bluefin account right now. You want to go into the description section, the first link on the comment section and the description section, you're going to see the Bluefin link. Set up an account, verify the account, make a deposit, start trading with them, and you're going to also get a free bonus. You're going to get a free trial bonus. You can also trade for free, and all you can only take off the trading is your profit. These guys are sponsoring this particular bootcamp. So all you also do is to start using them, make them popular like Bybit, Binance in Africa, guys. And the link's gonna be in the description section. And if you don't know how to use them or use the exchange, I've made a dedicated video how I made money with the Bluffing account. You can go to my YouTube channel BGW or search Bluffing tutorial BGW, and you're gonna see the tutorial, guys. Watch and then take action. So without further ado, let's talk about how to build a strong trading psychology. So I'm going to go ahead and write it right here. 1, have a clear strategy and stick to it. Have a clear have a clear strategy and stick to it. Now, to build a strong trading psychology, you must have a clear strategy and stick to it. You must not be jumping from strategy A to strategy B to strategy C. You must not be jumping from SMC to ICT or ICT to price action and price action to order flow. You must have a particular strategy. Know exactly why you are entering a trade and also why you want to exit that particular trade. So you doing this, you are as well going to build a strong trading psychology for yourself. Why? Number 2, use proper risk management. Let me write it down. And I believe you guys are as well jotting down these things, because these things are things that are going to help you. Use proper risk management. All right, use proper risk management and never risk what you can't handle. Now, if you must build a strong psychology in your trading journey, your strong trading psychology, so you must make sure you're using risk management for any particular trade you're trading or any particular setup you want to enter. And then you don't want to risk what will give you heart attack. You don't want to risk what will give you high blood pressure. You want to risk what you're as well comfortably to lose. That is you risking properly and also risking with risk management. At least you should be risking 1:3. My network is bad, guys. Let me refresh. I've lost internet connection. All right, so welcome back, guys. I actually lost connection. Right? I lost connection. So like I said, use proper risk management and never risk what you can't handle, right? And at least 1:3% of your account is good to risk, not all the accounts. If you know that what you're going to risk, you're going to be scared, you're going to have high blood pressure on it, just don't risk it. It's better you compound this stuff little by little than you chasing the big wins and then losing the whole account. So it's always best you preserve your capital by using proper risk management. So 3, to build a trading psychology, you must accept losses as part of the game. So you want to know that losing trades is normal and it does not define you, right? The fact that you lost trade today or you have a losing trade today does not mean you won't have a winning trade tomorrow, or does not mean that your strategy is not working, but it's just part of the game. Every trader loses. Every professional trader loses. Both the pro traders, they all have losing trade. So you the fact that you lost a trade today doesn't mean that you don't know what you're doing. It's because it is bound to happen. So you must accept whatever losses that comes. So 4, don't overtrade and wait for quality setup. One good trade a day is enough. You don't need a whole lot of trade. You don't need to look for setup on a lot of pairs. You just need one good trade, one good setup, high probability setup. Is enough for the day, is enough for the week if possible. Don't overtrade. Wait for quality setup. Wait for quality setup, guys. Right? So you don't want to be chasing for shitty stuff setup. You don't want to be chasing for, liquidities that will take out your money. So you want to wait for quality stuff setup, because that will build your trading psychology. That will build a strong trading psychology for your trading success. Right? So 5, journal all trades. Journal all your trades. So journaling your trades makes you stay disciplined. Yes, if you journal a trade, you keep in track. If you journal a trade, you know the reason why you enter the trade. You know what happened when you enter the trade. However, if you journal a trade and then it goes otherwise, or you lose the money, or you lose the trade, then you can as well know that, okay, on this particular day, on this particular time, set up, and in a particular amount of pair, you took a trade and it goes the other way. Then you can go back and check what happened. Why does this happen? Well, I remember vividly. Let me give you guys a short clip. I remember vividly. I took a setup on XAUSD. I was chasing a buy on XAUSD, and what happened? XAUSD turned, and this was on a Wednesday. And what happened? It blew the whole trade, and I lose the account. Reason because I was chasing little. I was chasing trades. I was forcing the trade. So I blew the whole account, and this happened twice. I saw the same setup, and it was on Wednesday. I saw the same setup on Wednesday, and what happened? The first Wednesday, it took out the account. The second Wednesday, it took out my what's it called? It took out my stop loss, and I lost the trade. So what I had to do was, this stuff has happened to me twice, and it's not good for you to as well repeat the same mistake all the time. Rather, if you get the same mistake or you lose a trade twice, you learn from the mistake. You try and fix, what is this thing I'm not doing right? What is this things I'm not getting correctly, and fix it for you to not to lose in the same strategy. So what I did was, I sat back, I watched the Wednesday trade, and I see that every Wednesday price tend to create liquidity. It formed that setup, it formed that story which you were expecting as liquidity. And what will happen? Most traders will want to jump on it. Now, instead of you to jump on such trade, all you want to do is to wait. Or if possible, you look for a setup to take out that liquidity down to your major trade. And which is what I did last week Wednesday that just passed. I'm recording this video on a Saturday night, at the time in Nigeria, African time, Nigerian precise. Right? So all you urge to do is you journal all your trades to stay disciplined, because it improves discipline fast. And you want to be a disciplined trader, not a shady trader that just been doing things haphazard. Right? You want to build strong trading psychology, and doing these things, we build a strong trading psychology for you guys. Now 6, focus on consistency. Focus on consistency and not quick profit. We are building and we are compounding generational wealth, and not a get-rich-quick scheme, right? In the forex industry or in the crypto industry. So you want to focus on consistency, because it is not a get-rich-quick scheme. Forex, crypto, trading in general is not a get-rich-quick scheme. If you think it's a get-rich-quick scheme, trust me, you will keep on losing, because your mindset will be for you to win, will be for you to get that money to buy a Lamborghini, will be for you to get that money to buy a Lamborghini as fast as possible. So you must not see trading that way. The Lamborghini will come. Yes, the Lamborghini will come. But first, focus on building. Focus on compounding, little by little, little by little. Not quick profit, not the $20,000, not the $50,000, not the $100,000 on one trade. You focus by little. Your daily wins, your $20 win, your $100 win, your $500 win, you're compounding little by little. If you do $500 today, tomorrow you do 500 is 1,000. Next tomorrow you do 500 is 1,500. Next tomorrow you do 500 is 2,000. Next tomorrow you do, before you do it from Monday to Friday, you've done over $3,000 or $2,500 is something. You're compounding. Next week, the same thing, $5,000. That is in 2 weeks. And in 4 weeks, you're up $10,000. How cool is that? How cool is that, guys? You ought to focus on consistency if you must build a strong trading psychology. So, number 7, stick to one setup. A lot of you all don't stick to one setup. A lot of you all don't stick to one setup. However, you must master one thing instead of chasing everything. Master one thing. I hope you guys are learning. I hope you guys are being rewired, because me teaching you guys, I'm already being rewired. I'm not just teaching, I'm also teaching myself because I'm already being changed. Stick to one setup, guys. Don't go from SMC to ICT. You're learning price action, you focus on price action. You're learning SMC, you focus on it and master the hell out of it. Don't go from here to here, guys. You stick to one setup. That way, you will know what works. You will know what works than chasing everything. You master one piece. You don't chase or trade. If you're trading XAUSD, it should be XAUSD. You're trading BTC, it should be BTC. You're a newbie and you have over 7 trades. How? You're newbie, you're trading both major pairs, minor pairs, exotic pairs, metals, commodity. Oh my God. Stick to one. Using your strategy, see if the strategy you've learned works on that particular pair. Because every strategy works on a particular pair. The thing is, you don't know how they react. You don't know the time they react so fast. You don't know when they move, when the Asia time, the New York time. You don't know the London time, if they react more on the London time, or if they react more on the Asia time, or if they react more on the New York time, or if they react more when the London and the New York is overlapping. You don't know. All you know is you are getting the pairs. You're looking for SAUSD. You're looking for BTC setup. You're looking for USD JPY. You're just chasing everything. You won't win. Your trading psychology is fucked. To build a strong trading psychology, you must stick to one setup. Guys, I'm shouting and I don't like it. I'm saying this out of pain, guys. I'm saying this because this is what a lot of newbies are going through. I go through the same thing, and that's why I'm saying it's so painful. It's not easy. The penalty of trading is you losing your money. It gets your mental health fucked up. It gets, and also you losing your money. That is how you pay. And I don't want you guys to keep losing so much, because fine, you must lose, but the fact that you lose more than you win is not nice. You master one art. Use your setup. You follow the BJW bootcamp from day 1 to the 30 days. It will end soon because we are in day 12 as at the time I'm recording this video. I'm sure use the strategy and master one pair. If you must trade gold and become a profitable gold trader before going to GBP JPY, before going to USD JPY, because those guys, they react differently. They react separately. The way USD JPY reacts is not the way SAUSD reacts. Go and ask any trader. That's why go and ask any profitable trader. Go and ask any pro trader. That's why I see most traders, they trade one pair. They just stick to one pair. If they don't see any setup on that pair, they just chill and then look for setup another day. But you, Ikenna, Prince, you want to look for pair. You want to keep chasing. You want to keep chasing from one pair to another. You're trading metal. You're trading gold. You're trading this one. You're trading commodity. You're trading index. Oh my God! I repeat, guys, stick to one setup. At the end of this video, at the end of this bootcamp, if you've learned everything I've taught you, delete your YouTube channel. Delete every trading group you are. Delete everything that's associated with trading group and just focus on what you've learned and get the real experience from the market, guys. That is how you learn. That is how you become who you want to be as a profitable trader. Because you're hearing advice from Mr. A, hearing advice from Mr. B, hearing advice from Mr. C. You're just fooling your dopamine with a lot of shit. So at the end of this bootcamp, guys, if you want to delete my channel, just delete it and focus in the real market, because I'm teaching you the real thing. So you must master these habits. Have a clear strategy and stick to it. Use proper risk management and never risk what you can't handle, guys. Accept losses as part of the game. Don't overtrade and wait for quality setup. Journal or trade and stay disciplined. Focus on consistency and not quick profit. Stick to one setup. Can each and every one of you watching this video comment on the comment section, stick to one setup? Because this is one of the things that kept me in the trenches for long. I wasn't sticking to one setup. But until I found this particular strategy which I'm teaching you guys, thanks to Dax. So now you've known how to build a strong trading psychology. Let's talk about the 11 trading code that you must say. You must read it, affirmate it, and that way you see yourself doing exploit. Let me bring this here on writing. So I don't know. I feel like I'm gonna be giving you guys this stuff. I'm gonna be sending this maybe to the Telegram channel, maybe as a PDF. You could just print it, paste it on your wall. I paste it on my wall. If it's possible, I could make a snap and show you guys that it's on my TV console. It's just there. Every time I wake up in the morning, I say them. Yes, I say them. Because that way it will help me build a strong trading psychology for me to follow. 11 trading. I don't mind if this video is gonna be a 1 hour video, but the thing is, if you must take something home, yes, if you must learn this thing and practice it. So this should be your anthem. The 11 trading codes activities you must follow. Now let's start with number one. Now you like I said, guys, you get this, you write it down, and like I said, to make it easy, I will try my possible best. If possible, I will type it. Then you can snap it on your PC, write it down in your book, and then print it, because I printed mine. I did it. It's on my desk right now. I'm not showing my face, so I would have showed you guys, but it's something I do. So all you urge to do right now is, as I write them, you write it down in your notepad, then go print it as a PDF, as a paper, something you see. And every morning as you do your morning prayer, you say this thing. You say it, because as you say it, it sticks on your skin, it sticks on your dopamine. It rewires the dopamine to let you know that this is what I'm following. These are the rules I need to be a strong and be a trading psychologist. Right? Now let's start with one. Now one, it said, every trade I choose not to take, enter at my entry, is a shot I have to be okay with. Does that make sense? Every trade you choose not to take, and then it entered your entry, is a shot I have to be okay with. Not you chasing it, not you want to force it. Number two, trading code ethics. You say, I will not act on my emotion as I am in a trade. In reality, it either goes my way or it doesn't. Now, I will not act on my emotion as I'm in a trade. In reality, it either goes my way or it doesn't. Most of us act on our emotion when I'm in a trade. Like I told you guys, like when I explain on how your psychology is weak, the things you're doing that are making your psychology weak. So you must say it, that I'm not acting on emotion as I enter any trade. I'm emotionless. I'm ruthless. If it goes, it goes. If it comes, it comes. Inshallah. 3. As I risk my stop loss and take the trade, I will accept whatever happens. As I risk my stop loss and take the trade, I will accept whatever happens afterward and hold myself accountable. 4. I will not blame any external factors as to why I lose a trade or win a trade. Most of us blame, okay, is the market, okay, is this, is that. So you urge not to do those things, right? You urge not to do them. If you enter a trade and then it goes other ways, blame nothing. Rather, fix what you think is wrong, because the market is always right. 5. I will trade only my setup and things that I have personally found during my pre-market prep. I will. 6. As I take a trade,
I have to accept that emotions will be on a constant move. So it is 100% on me to remain in control of them. So this is you telling yourself that you're in control of your emotion, because if you don't say it, you might lose or take surplus that day. So you also say this thing every day. 7. I will not be mad at green. I'll be mad if I don't follow my trading plan. A lot of us are always mad at green. You're seeing markets pumping, you want to jump into the trade. No, don't do that. You're only mad if the trade does not go your plan. If you don't follow your trading plan, that is where you ought to be mad. You're losing you lost the trade and you're mad. Why? You don't have to be mad. You just have to go ahead, go back to the drawing board and fix what you think is wrong. Right? Cool. 8. It is always my fault. The market does what it wants. So I have to follow with it. So like I said, you don't get mad at trade because the market does what is right. And 9. Not every day will present great opportunities. I will remind myself. Very important. So you want to know that you must not see winning opportunity every day. There are days that are going to be losing, they're going to be winning. So remind yourself, not every day will present winning opportunity. And 10, I am not in a get-rich-quick scheme. I am building and compounding a generational wealth. Stop chasing quick profit, guys. Know that you're compounding. You're building generational wealth. So, say no to quick profit. Get rich quick scheme on trading. And lastly, guys, 11. I will not overtrade. 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 I put it as you will say it 3 times. I will not overtrade. I will not overtrade. I will not overtrade. So these are like affirmations you need to say every day. You can copy it. You can, type it, copy it, and paste it on your what's it called? You can paste it on your board, in your house, and say it every day. 1, every trade I choose not to enter at my entering is a shot I have to be okay with. I will not. 2, I will not act on my emotion as I am in a trade. In reality, it either goes my way or it doesn't. 3, as I risk my stop loss and take the trade, I will accept whatever happens afterward and hold myself accountable. 4, I will not blame any external factors as to why I lose or win a trade. 5, I will trade only my setup and things I have found personally during my pre-market prep. 6, as I take a trade, I have to accept that my emotion will be on a constant move, so it is 100% on me to remain in control. 7, I will not be mad at green. I'll be mad if I don't follow my trading plan. 8, it is always my fault. The market does what it wants, so I have to follow with it. 9, not every day will present winning opportunity. I must remind myself. 10, I am not in a get-rich-quick scheme. I am building a compounding and generational wealth. And 11, I will not overtrade. I will not overtrade. I will not overtrade. Guys, if you do this thing in the next 2 weeks every morning, your dopamine will be rewired as a psychology trader, guys. Yes. Your dopamine will be rewired as a psychological trader. So my assignment to you all who have watched from beginning to the end of this video is to go ahead, write this down, and if you want me to send it to you guys, I want to comment in the description section, send a PDF. Then all you ought to do, if I see a lot of it right there, I will send a PDF on my Telegram channel, Twitter space, and even on the YouTube channel, so you can go ahead and copy it and then print it. So that being said, I believe you that watch this video to this end, you are now a psychologist. You are now a psychology trader. you understand what it means to be a psychology trader. And that being said, I'm going to see you guys in day 13. Stay safe and peace.